All right. Today's SPY was up 1.03%, and we did get another gap up, and we did close near the high of the day. And if we look at SPY, we are only now about 1.2 to about 1.5% away from a new all-time high. It just depends on whether you go by closing prices or intraday prices. So it is very possible we're right back on this bull. We have the bull breakouts, and price action just continues to slice through resistance. And with these two open gaps, these are typically breakaway gaps, which means we could be in the final stage of the blow-off top scenario. Because if you look at closing all-time high prices to the bottom of this pullback, we only had about a 5.3% pullback. And that is very typical and in very strong bull markets where you don't get deep corrections because everybody is chomping at the bit to buy into the market. And I've been talking about this theme that there is a lot of money on the sidelines, especially in money markets. So there is plenty of liquidity that wants to get into this market. And I did show you on last night's video, our trade performance is very advantageous to be in the stock market because we're kicking the S&P 500's butt as well as the money market. So there's lots of people who want a piece of that pie and they are buying into this market. This is a market that moves based off supply and demand, and right now there's enough demand to push prices higher, so just be aware of that. You don't have to rationalize anything on the chart, you simply follow what the chart is telling you. And I did tell you on SPY, these are higher lows and we are now breaking out to higher highs as we continue this push. So it is possible the momentum continues to pick up and we continue to make a brand new all-time high. So that sell in May and go away is not working so far. Doesn't mean it can't work. It's just simply not a good time to be out of this market. And it's very simple to manage risk right here because as I told you, you just needed to stay bull above 507. And if we break down below 507, just get risk off. And I always tell you as a retailer, you can get in and out very quickly. And that's why I refer to it as moving like water. So right now you want to up your risk level to about 513. And that's the level you want to stay bull above. And if we break below 513, it's possible we retest 507. The next upside resistance levels that I have for you on SPY will be 520 and 525. On the Nasdaq 100 triple Qs, we were up 1.1% today. And again, we did gap up. So we have another gap that looks like a breakaway gap closing near the high of the day. And we have the bull breakout as long as we're above 434 and we're pushing higher towards the low 440s, right around 442. And then the top of the range at 448. And my brand new all-time high price target will be up there right around 453. So the triple Qs is really just as simple as staying bull above 434. If we break down below 434, then we need to watch this support zone right around 430 and a gap to fill just below 428. But as I said with SPY, these gaps could stay open. If the breakaway gaps, we're just going to continue to run higher and fill those gaps at a later date during the correction. On the Dow Jones, we were up 0.43% today, and we have the second day in a row closing back above 385. And I told you above 385, it's possible the bulls push all the way higher to close this gap below 395. And I do want you to watch a resistance level right around 391. So stay below above 385, and you can get risk off if we break down below it. And if we break below 385, also watch for support right around the gap fill below 383. On the Russell 2000 IWM ETF, we were up 1.29% today, and we did fully close that gap above 204. So that gap is now closed, and above 204, we will be looking for resistance at 207 and then up here right around 210, and that's the previous closing high. And if we break through 210, this is going to look like a very powerful bull market in the small caps. But if we do get rejected, we need to watch for support right around this gap fill and breakout zone right around 200. So just stay bull above 200, and as long as we're above 200, it's possible the small caps start to run. On the ARKK ETF, we're up 2.27% today, and we're sitting right here at this very important resistance at a negatively sloping 50 EMA, which is going to be a resistance zone right around 46.5. And if we break above that, we're looking for a resistance right around 47.3. You can stay bull above 45, and that's also a gap fill zone, so watch that as your risk level if you're playing bullish in the ARK ETF. On the VIX, we were flat on the day, so we really didn't move anywhere, but overall the VIX below 15 is still a low fear environment, which means the bulls are taking back control, and it means the VIX could continue to crush lower towards 12.8. On Bitcoin, we're currently trading just below 64,000, and I still think there's a very good possibility of another lower high rejection here. So if you're chasing Bitcoin here, I do believe there's a good chance you're getting bull trapped. You can see all of these moving averages are still stacked to the bearish direction, so we still have a ton of downward momentum. And I really just think this was a oversold bounce because we were way below the lower Bollinger Band. We hit resistance, and I still do think we're going to 52,000 because we have absolutely no support below 61,000. So if you want to be bearish, you can get bearish below 61,000 or up here against the resistance at 65 to 67,000. If you're wondering what it's going to take for me to get bullish on Bitcoin, that's going to be a break back over 67,000. On Nvidia stock, we're up 3.77% today, and we're getting very close to the top of this range at 927 and then 950. And as you can see from the arrow, I do think we're pushing higher towards a brand new all-time high between 994 and 1032. So expect that to happen. and if our market leader is going higher to new all-time highs, as I'm predicting, then you can definitely assume the indices are going to want to do the same thing. So right now in Nvidia, I think you just simply stay above 877, and that's going to be your risk level, and below that we have a gap to fill below 863. On Tesla stock, we were up 1.97% today, and so far this is playing out very close, which is that I thought we would pull back to a higher low somewhere between 183 and 173, and then start pushing higher towards a gap fill below 207. I'm not sure the higher low is in just yet, so it's still possible we get a lower high here and continue a higher low pullback, and if we do that, I want to find support between 167 and 173, but in the short term, I think you can just stay bullish above 177 and look for that price target above at 207 because the risk reward favors it. On Apple stock, we were down 0.91% today, and we did pull back out of this overextended condition outside the upper Bollinger Band, and we're sitting right on top of the 200 daily moving average, and because we hit the price target at 187, I think we're just cooling down. A lot of people are taking profits and we're getting a little bit of selling, but I am expecting Apple to find support somewhere between the zone between 177 and 179, and then after that happens, I'm actually upping my price target even higher, and I do think we're going to start running higher towards 195. So to clean this up a bit, we've already hit the price targets at 187, so I'm going to delete those arrows, and I'm telling you here, I think we're going to pull back to a higher low, find support between 177 and 179, and then start pushing higher towards 190 to 195. So just simply manage your risk at any of these support levels if you're taking this trade, or wait for confirmation that we're finding buyers and we're reversing the selling, and then catch the momentum to the upside. So jumping back over to the S&P 500, we are getting very close to new all-time highs. So once more, the bears are missing another bull rally. So just be very careful listening to what the bears are telling you. They're very loud and they're very easy to believe if you think they know what they're talking about, but nobody truly knows where the market is going. That's why we follow price action and read the chart. As traders, we couldn't care less if we're going higher or lower, but we know we're in a bull trend and the odds favor that we're going to continue to go higher as long as we have a bull market. And if you still don't think this is a bull market, then I just think you're completely lost because the charts are speaking for themselves. So we are crushing the market in the Discord server. If you want to come crush the market with us and get access to all of my intraday updates, that includes my technical analysis as well as my trade ideas, then you can join the Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.